Hi guys, this is Matt from Optimus Futures, and welcome to another episode of Traders Interviews. With this time, I brought Steve Roehling. Let me tell you why I specifically brought him. I came across one of his articles online, and I always look for people who break the convention of regular thinking, and I think that Steve actually did do that for me. He mentioned a number of things in his approach to trading that I think comes from a practical trader. And again, I always emphasize it, and maybe some people are always sick of hearing it, but there are people who are good with ideas about trading, and they're theoretical ideas, and they sound good, like cut your losses short, let your profits run, trade with the trend. And this is the regular nonsense that we hear all the time. And once in a while, I come across a person who's a little bit more practical, has a little bit more of a refined approach. And there's one sentence that actually stuck in my head that that he said, actually that I read and he wrote. He said that he specifically develops systems that give a lot of trading signals, because sometimes human nature is as such that we get bored. So sometimes we do things out of boredom, and if a trading system does not trade very frequently, then we're starting to be, quote in quotes, creative and come up with their own trades. So without further ado, here's Steve. Thank you again for coming and dedicating your time. Steve been a trader for a long time. And so I'm gonna, let me start with that first question that we just discussed. Let's talk about the systems that you develop that provide frequent trading signals to fit human nature. How did you come to this concept, and how does it help you in your own trading?
Well, first, Matt, I want to thank you for inviting me today, and I'm looking forward to our discussion. Yeah, so when we connected, I think around that topic, and we talked on the phone, and how that's kind of something that jumped out at you and was maybe unique in my approach, and specifically that the systems that I like to trade have frequent signals or frequent entries that I can take under consideration for to take a position. And I guess the primary consideration for that was, I actually read a long time ago, and something that stuck in my head from Alexander Elder, right? He's written books on trading and so forth. And he kind of likened it to catching a bus. If you have enough signals in your system that you don't have a fear of missing out, and you don't feel like you need to chase the position, then it gives you a level of patience that you might not otherwise have. On the other hand, if you need to wait 4 or 5 days, or depending on your time frame, a long time for a position, you might get impatient and even take a position that's subpar with respect to your trading plan. So that's kind of in a nutshell how that fits into my the way I think about trading, and like to include these types of characteristics and strategies. That there's a number of quite a few entries that I can consider.
That's great. Well, what I particularly liked about that point was the fact that in classical approaches to trading, is they said you have to be patient until the signal comes and
Right.
until the market comes to you. But all those things are being said without the context of human nature. So all those things are really good, but then there's human nature, and I think you've added something of your own, psychology to trading, which is really nice. So I really like this approach, and I think it should, and I think people should adopt it. If there are people that it's not in their DNA to wait and sit for a
Right.
signal for 2-3 days, they should develop, systems that give them frequent signals, or a number of systems that maybe different approaches that give them signals, and that, as they say, they get it out of their system, and they still have a reasonable probability, at trading success. And having said that, past performance is not indicative of future results.
Well, and that's a number, there's a number of ways, I kind of go about it. Like I think you alluded to, you can either trade it. You can trade a number of systems so that, across, if you have multiple systems, across those systems, you'll have multiple entry signals. So, if you're not trading one system, you can trade another. Another way to think about it is even multiple time frames, right? If the same system or a variation of the system works on different time frames, you can consider that. So it's not just, I don't just think of it in terms of a single system or a single strategy gives me multiple signals. I try to build up a number of systems and strategies so that I'm not, I don't become bored and enter into positions that I shouldn't, right?
Understood. Okay, let's get to the second question. Tell us a little bit, how do you research new trading ideas? How do you go about it?
Well, based upon my background has been, it took me quite a long time to arrive at some strategies and systems that I feel like I have some traction with. And, I guess, in the beginning, when I first sort of dedicated myself to being a trader, I did what probably a lot of people do. I started reading books, and I started learning about risk management and momentum strategies versus mean reversion strategies and all of those things. And what I found, just through experience is that if you adopt sort of a textbook approach, you're not really going to have an edge. And moreover, the people writing those textbooks, I believe that their edge is oftentimes something that's not said in the textbook or can't, they can't quite verbalize it. So I found that, sometimes the textbook or something you might pick up on a blog is a good starting point, and a lot of times a good way to learn. But then I cast a wide net to find ideas of ways that I can either vary the system or customize it to myself. And, I read blogs, I listen to podcasts, I read books. And then over time, I think you build up sort of a body of knowledge and you say, well, I learned about, using this type of momentum strategy. What if I changed the mathematics a little bit and did it this way? Would that work in my system? So I think it's just for me, it was just over time, just soaking up as much knowledge as I could, casting a wide net for knowledge. And then ultimately, I believe that I had enough information or enough knowledge that I could start to think of ways that I could customize it that was unique to me and gave me an edge.
Understood. Which is a nice approach. So you're open-minded, you listen to what other people say, some of them being fully aware that some could be theoretical traders who just want to sell books. Some you might listen to a podcast that might not be useful, but he might say one sentence that might help you in your methodology. That's great. So let's talk about, you develop a method, you test it and so forth. And let's say you start trading it. In one of your articles, you mentioned that you sometimes or at times refine systems. Tell me about the process of refining a system without rewriting the code. And I want to share with you that here, what we experience on the retail side, because I think sometimes, although you're a retail trader, let me tell you what the biggest, obstacle that I see, in retail traders, it's like fashion. One day they try Fibonacci, and the next day Elliott wave, and the third day it's some sort of an exponential moving average. So when the system does not, starts to, I'm not saying necessarily no function or break down, but you have your suspicions that it needs tweaking. How do you refine a system without rewriting the entire formula? What do you do? What's the process of refining a system or a method?
Well, in general terms, there's a finite number of moving parts, if you will, in a system, right? There's your entry signals, and then there's your money management, and then there's your the way that you manage risk and how aggressive you are in exits and so forth. So if I'm going to refine a system, I try to be scientific in terms of, you only want to switch out one of the moving parts. Otherwise, it becomes sort of an unscientific experiment, right? And you don't know where you started and where you end up. I'll just give you an example. One of the core methodologies that I use in my systems, I like to have small position sizes, right? And to me, I've just found over time that is compatible with my temperament and the way that I like to trade. I didn't initially have small position sizes. I would maybe have 3 positions in my account, and then those are relatively large. Well, I had one trading event where I had a large loss on one of those 3 positions, and it was just through just the pain of that loss that I said, okay, it's time to refine my plan and think of a better way to do this. The other way is just if I have a strategy that's basically working, I try to journal these trades, and I track them, and then I'll go back and do kind of a post-mortem. And then in that post-mortem, you can often see, even with some basic, kind of a basic summary, well, my stop losses were a little tight. So if I went back, the last 30 trades and just loosened the stop loss, what would my performance be like? So it's almost like a mini back test of my own trades. And I'll say, and then I'll refine that going forward. And then I talked before a little bit about, just casting a wide net and listening to what other traders are doing and say, hey, maybe that's something that would work in my system. So I'm not averse to trying things in my system and listening to what other traders are doing, even if they're on another time frame or trading another type of asset class. Oftentimes the wisdom is transferable, right?
That's intelligent. So basically, when you refine a system, you look at one variable at a time and try and refine one variable as opposed to redoing. So it's either could be the entry, it could be the risk management.
Right.
You mentioned size, and I wanted to share with you that clearly I'm a trader as well, and I've traded for many years, and I've made a mistake of size as well. And I think all of us did it. The market has the ability to initially to say, hey, you're so good at what you do. Why have one position when you can have 10, right? But
right.
What we don't realize along the way, how much it messes up our psychology and our decision-making along the way, because we don't have any maneuver, any room for maneuver or for error, at large sizes. So, and I got to tell you something. This is something that I say to all my customers. It doesn't matter if you have PhD in nuclear science or you're a janitor. When it comes to size and greed, it strikes all of us, and we all have to learn and go back to basics to do that. So I've been there before. Our customers have been there before, and you've been there before. So I totally understand that.
Well, and I think that for me, if I had to pick out 5 or 6 of the things that helped me in my evolution, size was one of them. Dial it down and make it so that you can sleep at night and keep your emotions in check and stay methodical. And so size has been extremely important for me.
I think size also has to grow incrementally. You can't go from 1 to 5. You have to go to 1, 1.5, 2, 2.5, 3, if it's possible. Obviously, in futures trading, we don't have 1.5. But essentially, what I mean by that is gradually to see how it affects your psychology.
Right.
That's what you have to do. Kind of go with it slowly, kind of training your muscle brains to the leverage, and everything else. All right, I'll go to the next question. By the way, great input. Love this conversation. Love where it's going. Okay, so in one of your articles, you said that the right system could fail if the trader does not have the right skills or psychology. A trader could be the weakest link. By the way, I agree with you 100%. So essentially, we can have the right system, potentially, I should say, a profitable system, and yet the trader could be the weakest link because of his psychology. Can you talk to me a little bit about what do you consider to be a weak psychology in this case for a system? So we have a good system. What is a weak psychology in that context?
Well, again, I'll talk a little bit about my evolution. So you know that I have an engineering background. That's my profession. So I kind of initially approached trading from a very logical and technical perspective. And I had enough passion, I had an interest in the markets, and that's important, but I don't believe my psychology was there. And what I experienced is that it wasn't so much my technical ability or my passion to learn and to study and research the markets. That's not what made it fail. It was my impatience and my psychology. So I want to share with you a diagram that I created.
Please.
That this summarizes sort of at a high level the way that I sort of think about the different elements of a system. And and back to your question, if any one of these things are out of balance, and I talked about impatience, then the whole thing can fail, right? And just a little bit more on this diagram. I mean, what I mean by good trading is not necessarily, is it a profitable trade versus unprofitable trade? What I mean by this is, did I follow my methodology? Did I stick to my plan? Did I go through my checklist? And it could still have been a losing trade, but I would have minimized my losses and had good discipline, right? And where bad trading consists of things that are synonymous with not having discipline or not having patience, right? So, and this diagram is really kind of based upon my own experience, and it's not a surefire thing, but it just helps to I think at a 5,000 foot level to kind of summarize all the different elements of a system and how, like you talked about, the trader can actually be the weakest link, right? If you could have a system that is otherwise profitable, but because of your impatience, you get out of the positions early, or you overtrade and take too many positions, or any number of things, right? Or greed. We talked a little bit about that with position size. If my size is too large, I'm gonna maybe have too large of a position and expose myself to a loss in my account that I don't want to see. So this is kind of I think a 5,000 foot level, and it shows how all of these things really need to overlap, right? In order to have the discipline and have all the elements in place to be, quote, good trading. So, and the delicate thing about it is really, if any one of them falls out of place or is out of balance, the whole system can fall apart. And that's been my experience.
First of all, it's a great diagram. I'm just going to tell our listeners that at the bottom, we will publish this image. So if you look at scroll down on your YouTube, or if it's on the blog, we will have it attached. And we're also going to have a link that the guys can actually click on. And so first of all, it's a great diagram, by the way. It really is one of the better diagrams that I've seen out there. And I think everybody should really look at it and learn it, because it's very objective. I know exactly what you're talking about. Like, we all know, the rules of what not to do, but we also know them in isolation. When you look at all of them all together, it gives you a much better perspective. And just to add to what you said, that you're an engineer, I want to share something with you. My father is an engineer. It took me years to realize how engineers think. It's a very linear way of thinking,
right?
And it's a logical way of thinking. And one thing has to lead to another. And I had to explain to my father that the market is not like that at all. That it doesn't follow linear logic.
Right.
It follows its own logic. It does what it needs to do. If you end up sitting there and scratching your head for 2 hours of why, it's the wrong thing to do. You just have to accept it and move on. So it's interesting that the market, just to share with you, if you can maybe bring me back.
Yep.
Okay. So the one thing that I wanted to also share with our viewers, that you could have a discipline that you're in, whether engineering or a doctor or an accountant, but those skills in the marketplace sometimes are a weakness. They're great in your profession, but they're a weakness in the marketplace, and you have to learn to kind of disassociate yourself from your best skills that help you in your professional life. Great diagram, by the way, and I'm really looking forward to sharing it with our guys. Okay, let's go to the fifth question. One of the things you said, don't overly focus on technical analysis. So explain that to me, because I think majority of people are not only focusing on technical analysis, they're obsessed with technical analysis, right, of all kinds. So walk us a little bit through what you mean by that and kind of how you apply technical analysis.
Well, we talked about, me being an engineer. So when I first started trading, I naturally gravitated towards the technical analysis, right? It looks so, it catches your eye, and it looks so logical and linear, and so that was something that I had to sort of check myself, if you will, because as an engineer, I felt like I went down the rat hole and just became too big of a part of my system. So I, as I gain more experience and learn more about the markets, you start to learn more a little bit about, price is to me, the ultimate technical indicator, right? And if you can look at price and start to understand the ebb and flow of supply and demand and what the different market participants are doing, I believe that it, at a high level, is a healthier way to approach it. Now, that being said, I do include technical analysis in my trading systems, in oscillators and momentum indicators and so forth. But I just try to keep it in check and keep it in balance with basically price being the primary thing to look at, and not using technical analysis to get carried away and too far removed from price, right? Some of them use PhD level calculations that you don't even really understand what they're doing. And so I focus on indicators that are, I can kind of understand what the math is at a glance, and then at least orient me to the price action and so forth. But try not to overdo it.
I totally agree with you. I think price is the number one thing. The problem with technical analysis, with the way it's approached by classical writers out there, and I'm not going to mention authors because a lot of them have deep respect in the industry, and I respect them to a degree, but a lot of them have explanation for everything.
Right.
Every single market move was a result of a pattern. It was always head and shoulders of a certain support and resistance, and it's always hindsight analysis, right? And
right.
A lot of traders fall into that thinking, oh, well, but they don't see it as it forms. That's the difference. You're trading live market, real emotions. Right. It's all a lot of it then is on hindsight. So that brings me to the next question. Okay, so now you also mentioned that you do backtesting. Can you talk a little bit about manual backtesting versus computerized backtesting? What I'm really trying to understand, what perspective does it give you as a trader when you backtest it manually and when you backtest it via a computer model that just spits numbers at you?
Well, a computerized backtesting is, I believe, in balance is an important part of one's trading regimen. It can give you kind of a statistical profile of, do the types of trades that you want to take, do they at least have positive expectancy, or, you can fine tune, the parameters that you might use for entry. But in my experience and my knowledge, the computerized backtesting has its limitations. Unless you are a programmer and writing, very customized backtesting software, these backtesting platforms generally, again, focus around technical indicators. I'm going to do a mean reversion strategy based upon RSI and so forth. And what I found when I started to take a little bit more of a top-down approach to the market, some of the patterns that I saw were not necessarily conducive to computerized backtesting. They'd be, you'd see something that in a chart pattern, maybe based upon, pivot points or something like that would be difficult to program into a computerized backtesting system. You could do it, but it would be pretty hard and maybe not worth your effort. So that kind of segues into what you can do with a manual backtest. So number one, if you're coming to the markets and you don't have a programming background and so forth, this is something that you can still do. It's a little painstaking, but you can step through the chart, one bar at a time, and basically simulate on paper or in a spreadsheet whether or not you would take an entry, right? And it's beneficial if you don't have a technical background, and I think it's also beneficial in that when you do it this way, your eyeballs are also on the chart, so you're not, just breezing past all of these potential entries. So you can pick up other things and patterns about the different entries. So one place that I do like to use a manual backtesting is, we talked about earlier, when I want to refine a system and I'll have a spreadsheet full, which has tracked, my most recent 30 or 40 trades. Well, one thing I can do is, if I want to change one variable, I could go back and sort of plug the back test into my spreadsheet against my own system and say, well, would the performance improve if I did that? So that's an example where I'd use manual backtesting for helping to refine an existing system. And I could go on, but I believe that there's a place for both types of backtesting.
Okay, fair enough. Okay, I think you answered that, where you get your trading ideas from, which I wrote. I want to talk to you something which is of personal interest to me as well. Let's talk about intuition, okay? Mm-hmm. I've heard both sides of the argument. I'm in the side of the argument, I'll be very honest with you, and your opinion might be different. I'm really against such thing as intuition. When people look at things, regardless of how long they traded, saying things like, I think, and I feel, and it may, based on just gut feeling. I think it's a very biased approach. I think people remember only when they were right, and they missed trades as a result of right. And I don't think they remember the things that they were wrong. But in your experience, but I nevertheless respect the fact that every individual trader has its own experience. And some people could develop maybe better intuition because of the skills that they have.
Right.
But in your experience, do you think that intuition increases with more screen time? The more you watch the markets live and trade them, is there such thing as intuition in your opinion? And the reason I'm very interested in your opinion, because you seem to have a very mechanical and systematic approach to the market.
Right.
Of developing things. But talk to me a little bit about how you feel about intuition in general.
Well, in my experience, it was important to get some screen time and watch how the price moves and look for things like capitulation and strong momentum and familiarize yourself with the behavior of these different markets. Because, one thing I've observed is that, different markets have behaved very differently, over time frames and with respect to news and different events. So, I guess intuition is in part gained from your experience, and you start to see patterns for yourself that you might not otherwise see if you were strictly mechanical. I try to be as systematic as I can in my trading and as mechanical as I can, but I do leave the door open for some discretion and some intuition. And I'll give you an example. If my portfolio is already full of positions and I only have one more trade that I can make, right? And I have to choose between two different positions or two different trades. Well, at that point, I think it's still reasonable to default to some intuition and discretion and say, well, hey, this one, based upon what I've seen, looks a little better than the other one. Right. Otherwise, I don't believe in a purely mechanical approach. And back to screen time, I think that it's important to learn for yourself what these patterns are and see them in a live market. And don't get too far down in the weeds with the math and the algorithms and so forth, because you get disconnected from what the actual market participants are doing and thinking, and again, it's just all about finding a balance with that.
I agree with you. There has to be a certain level of discretion in the context that you mentioned. Unfortunately, when it comes to intuition, a lot of beginner traders try to catch tops, saying the market can go higher from here, when in fact, most experienced traders love to buy into new highs, or experienced traders love to short low markets, and beginners love to catch bottoms, and they're saying the market cannot fall more than that. It already fell 10%, So there's a context. I apologize, my phone just went off. Okay. So in that context, I respect the decisions that you take. Okay, let's talk about finding the right system for you. Okay, let's talk about how do you find the right system for you. Did you ever encounter a situation where a system was actually potentially could lead to success, but you skipped it because you said it's not in my nature to trade it? And how do you find the right system for your own nature?
Well, I guess in the evolution of myself, starting as a new trader and then, getting to the point where I am now, I guess, I would hope that other folks have had an easier path, but for me, it's been a fair amount of trial and error and system hopping and trying different time frames. So, almost a process of elimination to find out what works for me and what doesn't. And I think I see a lot in new traders. They're drawn to the shorter time frames and the more exciting asset classes, right? And sometimes I don't think that is necessarily the best approach for a new trader. It requires a level of skill and psychology that they may not possess as a new trader. I think that I'm a little biased towards longer time frames, because I believe that, again, just through trial and error, it matches my temperament. It matches the schedule that I have that I can use for researching new ideas and doing the analysis. So I'm not a day trader. I strictly trade end of day positions. So it was really just trial and error and basically process of elimination of trying things and figuring out this is not for me.
I know exactly what you're talking about asset classes, because in your diagram you had the FOMO, the fear of missing out.
Right.
It's not only the fear of missing out in a certain asset class that you trade, people are afraid to miss on the asset class as a whole. So they're afraid
Right.
to miss out on the crypto, right? And then there's the cannabis stocks, that they jump. And, and the market, by the time they get the information, and what I say to people, if you trade chasing asset classes that are in the news, by the time they made there, they could still have potential to move higher. But the corrections that they will have are violent. And majority of people will absolutely lose their capital in trading it. So it's better to focus on one asset class, stick with that asset class, not to do
Right.
all this hopping. But, honestly, I'll be honest with you, sometimes I feel like I can't change human nature. And today we have blogs and podcasts and news outlets and Reddit, where people write about all those things. So it creates this emotional turbulence in people, which leads them to those, unnecessary, well, I shouldn't say unnecessary, it's an understatement to say an unnecessary action. But again, they want to capitalize really fast. They think they can turn small amounts into big amounts. It's scary what's, what the internet, how it expanded and how it affects and influences people's decisions today when it comes to trading.
Well, and I think it's back to the human factors that a new trader, the fear of missing out, or they initially their the interest in the market is more about the thrill and excitement that they might gain from being in positions of these asset classes. And frankly, I think it's kind of a hard sell to say, hey, why don't you shift to a higher time frame and slow it down and see if that's the right approach for your temperament and the right approach for you to get an edge, right? So I would discourage new traders from jumping right into those short time frames and extremely volatile, asset classes.
Agreed. So, okay, let's talk about this. We focused here a little bit on psychology. Tell me specifically, what has been your biggest struggle of psychology? When did you realize that it's not your method, but it's your mind that's doing tricks on you?
Well, again, as a new trader, you and coming from an engineering background, you have linear thinking, and you have, you think, well, I can just use my problem solving and break this down in point A to point B, and it'll be no problem whatsoever, right? And that's what happened to me. I was trading, and then the market, you start to experience things day to day of putting on positions and taking risk, and the emotion of holding a position overnight or experiencing a large loss. And it really drives the nail in terms of the human factors and the psychology being most important. So it's really just the experience that brought that home to me. And then I believe, and then reflecting on that, and then kind of taking inventory of the things that I've put into place for myself, I believe it is really impatience that was the number one problem for me psychologically. And we already talked about using finding systems with lots of entry signals as a way to not feel like you're missing out. I mean, the other things I do, one of the ways that I view a benefit of backtesting is that you can gain a statistical understanding of your the profile of your system, so that you may not be as quick to pull the trigger on an exit and be jittery. So it was really, it's a combination of many different tactics and techniques and tips that I've had to learn and incorporate into my system to really try to be more patient. And I'm still a work in progress, right? That it never seems to end. But I believe that impatience has been the biggest problem, and it's taken efforts on a lot of different fronts to help me there.
Um, One of our trading colleagues here at Optimus Futures, one of our associates and customers, have actually developed a software called Edgewonk.
Yeah.
And so I totally understand the idea of looking at things when you journal them, put them into numbers. It actually reveals a lot about not your specific, but everybody's personality when they trade, how frequently they trade, the percentage that they experience. It's again, goes back to, this is something that intuitively we cannot do, right?
Right.
So even if we have a successful system, we still have to look at what led us to this success in a very objective way. So I totally believe in journaling, totally believe in putting numbers into Excel, going through all the ratios. In fact, one of the guys that we interviewed here, Jack Schwager, right, where he looks, for him, performance, what I'm saying is, he raises money for successful traders, right? So he would take somebody who's a successful trader, and he will see if he's capable of taking on additional capital, trading larger capital, and if his method could be duplicated, to others. But he said that, I don't remember if he said percentages, but he said performance is not the major factor for him. So he looks at all those ratios to see how a person preserves his capital versus how much money he makes, right? Because he said it's just such a small portion of the story of how much a person makes, because if he doesn't have the right risk management or the right ratios in place, essentially the system will collapse in the long run, and he shouldn't be a money manager.
Right.
I'm in my last question, okay? And this is a question I'm also have a lot of interest in. Your definition of an edge. Specifically, do you believe that good trading is just part of the flow with trading, or some people define edge and finding an underpriced or overpriced variables? Over those years that you developed, do you believe that a person can have an edge? And what is an edge for you as a trader or as a concept?
Well, that's an interesting point, because, starting off in trading, I probably followed a similar approach where I would look at textbooks and I would look at other people's systems and try to basically mirror what they were doing. And a couple things have happened. I realized that, again, back to the human factors, I may be able to follow the system, but I don't have, we'll call it the psychological edge to be patient and to wait for good entries and to follow my plan meticulously and do my homework and all of the things that wrap around a system to make it successful, not just the strategy itself and the statistics, right? So there's definitely, insofar as a human being is involved in any way, I do believe that those human factors can be an edge. With respect to an actual technical edge, again, I don't believe that. I've tried backtesting systems with RSI and all the technical indicators, and I've kind of come to the conclusion that I think the trading community has kind of beat those things to death, right? And I've kind of reverted to a little bit more of a top-down approach to be a little bit more creative in the ways that I can find ways to either vary my system or have a technique that might provide an edge over someone else. So I may start with a system that looks relatively close to something you'd see in a textbook, but again, casting a wide net and getting a lot of different knowledge, and then maybe it's something I wrote down in my journal 3 weeks ago. I could say, hey, why don't I try that? So I do believe that getting an edge ultimately is you gain the knowledge, and then you can have some creativity to change your system or tweak your system a little bit, and not necessarily be the same as other traders are doing. So it might even be a little bit unorthodox, and some of what I do is unorthodox, clearly, but yeah, I think you can't follow the crowd and do what everybody's doing. You have to find a way that you research and generate new ideas that is unique and different than what other people are doing.
I agree with you that you have to develop your own system. I think many beginner traders try to imitate other traders. And the problem with that is that it creates the what if in your mind. So you're not the one who developed the system. You're not the one who observed the system, backtested the system, whether manually or mechanically. And when you start trading it, and the position doesn't go in your favor, which 90% of the time positions don't go in your favor right away, then you're starting to doubt the what if. If you developed the system, you saw the drawdowns, the daily drawdowns if you're a day trader, the fluctuation it goes through, you're saying, yeah, this is just part of the system. That's what it does. But so when people trade other people's systems, they're getting 10% of the picture. They don't getting 100% of the picture. They don't get to see the volatility around it, the back testing, what led to that system. They just say, oh, he's successful, so I can do that. And I've seen actually systems that work for some people, and for others, somebody tries to imitate it, but they can't because they're not the ones who developed it, right? So you have to have a full comprehension of everything that comes with that system, even if it's a simple system. Especially on higher time frames where you could have larger volatility in your equity. And new traders are not, I shouldn't say not equipped, but it's really hard, when you come to the market and your idea is that you should make money and all of a sudden you're in a drawdown.
Right.
And most of us, even if you're making new highs in your equity, most of the time you're in a drawdown from your new highs. It's not new highs, new highs, new highs, new highs. It's new highs and the drawdown, and maybe new highs again, and then a bigger drawdown, and then new highs again, if you're good at what you do. So I totally understand the process that you went through in the beginning. I really enjoyed this webinar. We have to end it here. I think that all the points that you brought here are very practical. I think they're going to help our customers because they're practical and real, and they come from a good place of practical experience. And I hope you'll come here again, to share it with us. I'm very grateful that I have actually printed this for myself as well. So I can share it with customers. So, we are futures and Forex self-directed online trading, right? But I do enjoy still talking to people about discipline and helping them out and specifically focusing on interviewing and helping and growing our traders' mind and abilities so they can be good at what they do. So I really enjoyed it. I'm very grateful for your time, and we'll see you again in the future.
Well, yeah, thanks so much, Matt. I appreciate you having me on. It was a great discussion. Thanks.
Thank you.